Hello everyone and welcome to the webinar, and thank you for your patience waiting for us to start. We were just getting the recording going and also getting back into the swing of things as we've had a couple of weeks, a little bit of a break. This is trading, as I mentioned in this morning's webinar, is well, we don't find it stressful. We've been doing it so long. I mean, you know, with VPA and our indicators, genuinely, we do not find trading stressful, but it can be very tiring. You have to focus. There's a lot of information you have to assimilate and quickly. So, you know, occasionally we do all need to take a break. And if you are just starting or you have been trading for some time, please, you've really got to take care of yourself, physically take care of yourself. We spend a lot of time sat on our backsides in front of screens, so, you know, get up and move around and make sure you take lots of exercise, stay hydrated, and occasionally just take a break. The markets are always there. They'll be there. You know, something is always going on, and problem sometimes the bit of a downside with trading is we can get addicted to it because it's great fun, you know, particularly if you can make money at it as well. Anyway, but before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. It is also a risky business, and so please don't ever think of using money that you cannot afford to lose. I really want to crack on quite quickly because all sorts of things are happening. They've literally happened in the last 5 minutes, David, haven't they? I have indeed. But before we move on very quickly, we've done the disclaimer. This is me, this is David, and we'll be looking at the markets through the prism of volume price analysis. I know a lot of people who come along to this session have already got the book. Thank you so much. Really grateful. And I'm also very grateful that the book has been such a help to so many, I mean, literally thousands of traders now. And I've got lots of emails, you know, what do you call it, reviews on Amazon, just to say that it has been testimonials to say what you know, a game changer it has been for them. But it's actually very straightforward. VPA, it's looking at price action and volume to really try and anticipate where the market is going next. And what we've done, as well as the books, is we've now developed a whole suite of technical indicators to help us, you know, just be even more successful. With the book, the base book, there are also now books of the examples, worked examples in all sorts of time frames and all sorts of markets, because that was one of the questions I've been asked by a lot of traders and investors, saying, look, you know, we understand the principles behind volume price analysis, but, you know, could we just see it how it's interpreted on the different charts in different markets and in different time frames. And so there are two books of examples, one that covers indices and commodities and stocks, and the other one is for the forex market as well. They're all on Amazon. Just search out either Anna Cooling or volume price analysis, and Amazon will do the rest for you. As I mentioned, we've developed a set of indicators to help us in our both forex trading and trading the other markets, both time charts, non-time based charts. You can find the details of the indicators at quantumtrading.com. Now, the reason this slide has come up is because we're actually just using NinjaTrader today. I have NinjaTrader, David has NinjaTrader, but the tools are available for MT4, TradingView, not all the ones for TradingView, because it hasn't been possible to port some of the indicators to TradingView because of the language that they use on that platform. And we're now actually working on TradeStation as well, which is really very exciting. This is the site, quantumtrading.com. Lots of videos, explanations of how you can use the indicators, and obviously the price for the indicators. You can buy one, you can buy bundles, or you can buy the full package. All covered by a 7-day money-back guarantee. Upgrades to the indicators are free. You can switch platforms. Sometimes there's a difference to pay in platforms. As I said, NinjaTrader is, because there are more indicators, is slightly more than, say, the ones for MT4 and 5. And finally, if you want to catch up on my analysis, I've been a bit behind because we've not been around, but there's going to be a load of analysis going up in the next day or so. That's annacooling.com, and you can also catch details of how I update the various Facebook pages that I manage. And if you want any information on anything you hear in this webinar, you can email me, anna@annacooling.com, or david@quantumtrading.com. There is another email, which is help desk. That's sort of for you guys maybe who've already got the indicators and you've got a query or an issue. If you email helpdesk@quantumtrading.com, the guys there will help you. Anything else, David or myself? Right, we're ready to start. I'm just going to pass over to David while I set my charts up, and we will get going.
Thanks, darling, and a very warm welcome to you wherever you are in the world. Hope it's warmer where you are than it is here, as we're heading into autumn and the winter, which is lovely. Never mind, there we are. I'm sure it's nice where you are. At least I hope it is. Loads going on. Had a great session this morning in the forex market, talking about the political overlays which now dominate the markets, and indeed in the last sort of few minutes or so, we've seen that in play again. Indeed, the last sort of hour or so. It's pretty much in evidence almost universally across the markets now, both in forex and also in equity markets as well. I've got Ninja running. I've got be jumping around. I've got all sorts of things going on. I've got currency futures, got commodities, gold, got the indices, and we'll just hop around, see what's moving, see what we can pick up, and take it from there. We'll have a look at the currency indices as well, because they're moving quite nicely. Yen's falling nicely. Which is why we've got decent moves on indices right now. Let me pass back to Anna, and then we will get going. If you have any questions, just drop them in the chat box. Happy to answer them there. If they're short questions, if they're longer ones, we will answer them on air for you.
I know a lot of you come. This is the start of your trading day. You're in the North American, you're in North America, either Canada or the US or Mexico. And obviously, there's a lot that's happened already. You need to sort of bring yourself up to speed very, very quickly. I'm sure you've all got lots of different news feeds, but in fact, what's the reaction, what is happening now, actually happened overnight. It's kind of started over in Asia. There was all sorts of conflicting reports. It's all to do with trade. The S&P, I think, on Globex fell, was it over 40 points, David? I think we're down 41 points. On the hourly chart, we had a huge volatility candle, and in fact, there was not a lot of volume underneath it. Volatility then kicked in, and then we had the usual reaction with the price action moving back inside the spread of the candle. So there's a lot of confusion overnight, conflicting information about whether there was going to be a deal. This is between China and the US. There is another trade issue which is going to be coming along fairly soon. When we in Italy, it's to do with US and Europe. We've got 18th of October is the deadline when tariffs are going to come into force against various European goods. This is in not so much retaliation, it's just the WTO found in favor of the US. It's a dispute about Airbus and the fact that the US complained to the WTO saying that France and the Europeans had been subsidizing their aircraft industry unfairly. The WTO agreed, and it kind of gave the green light to the US to put some tariffs on European goods. It's Germany's cars, isn't it, David? In Italy, it's cheese, which sounds very amusing, but it's actually hugely important to Italy. And I'm talking about pecorino, I'm talking about parmigiano, which, you know, as I said, it's cheese. But hey, you know, it's part of 4.5 billion of exports to the US, so it's something not to be have severe consequences for the producers in Italy. But that's not the deadline for that. Is 18th of October, so that's next week, isn't it? So that's next week's volatility all set up. Right. What is also happening is with the Chinese, which is quite important, which is this headline here, which is this. We're talking it's a currency pact, an agreement in return for a delay. In other words, the Chinese would manage their currency so that it doesn't depreciate too much, because one of the ways you can get around tariffs if you're an export country is you weaken your currency. So your currency is weak, and you sell to someone with a strong currency, so your goods are cheaper. So that's in the mix as well. And of course, here in the UK, we have Brexit, and underneath all that, if you look down here, there has been this outbreak of fighting. Turkey seems to have taken this as a green light to start bombing bits of northern Syria, and they're on very many years of ongoing conflict with the Kurds, who are, who've been supporting the US in their fight against ISIS. It's a dreadful political situation, and that's all kicked off as well. So as I said, there's so much going on. And that's before we even get to the charts. Now, to get to the charts, one of the things, two things I want to say about day trade. Well, we'll talk about day trading in this session, in this webinar, and we tend to focus on the indices because I know a lot of day traders like to, specialize on one index, maybe two. Certainly for futures, you've always got this issue of margin. Do you have enough money in your account to be able to, happily go from one index to another or to another future? So there is a lot of traders do like to specialize. David likes the YM. It's just, I don't know why, but on the YM, I think David will probably give you the reason why we focused, or he focused on the YM. It's different in forex, in spot forex. With spot forex, with our traders and in our trading program, we say when you start, by all means start with one pair, something like the pound dollar or the pair that is most suited to your time zone. But eventually you have to kind of build up a little portfolio, maybe 3 or 4 pairs, because action is not going to be consistent across the pairs. It's very similar in the indices as well. So if you do specialize in one for whatever reason, I've just got the YM up here at the moment. But one of the things you have to do is after acquainting yourself with what's happened, what is happening now, how is the market going to react maybe to the breaking news that we have at the moment, is to what is the condition, what is the state of the index or the market that you are looking to trade. And this is not so much bias, it's really looking at the chart in terms of its current structure. And it's a very good idea to go to the monthly chart. And the reason I say this is because we have here the monthly chart for the YM, and it's a really interesting looking chart. If we scroll back here, right back to this, we can see it's 2016 here. We have this support platform come in for the YM at, in fact, my goodness, let me see what it is there, at 15,000. And as you can see here, once it lifted off, it tested this platform on 1, 2, sort of 3, 4 occasions, but gradually, as you can see, we have the start of this tremendous trend higher. When markets are moving in this fashion, moving higher, what do you see with the candles? You can see, not very wide spreads, reasonable amount of what's supported by reasonable volume. At the time, the VIX was probably in the low figures. So when markets are complacent and moving higher, what does that tell you on a daily basis? Well, you've got a very narrowish range. So taking points on a daily basis when markets are in this sort of gentle trend upwards, if you like, with not big ranges on the day, it's hard work. It's you will get there, but it's kind of grinding it out. But that's the condition of the market at the time. Then you get to a point where it starts to climb the wall of worry. And in fact, we can see here we have the spreads widening, but the volume doesn't increase. So you have anomalies suddenly come in. And then we had this first major volatility. If we recall that far back in at the beginning of this year. It actually started December last year, 2018. If you remember, the Fed decided that it raised interest rates. Market didn't like that. Then you start with this volatility. And if you look since then, we are basically been in a long protracted consolidation phase. Now, when you look at this type of price action on this chart, it is tempting to think, well, is this the start of a major market top and distribution? Because this is classic what happens. You have a lot of volume going in, you have a lot of volatility, you have big ranging candles, You know, and it really is, and people have been calling this top. As I said, this is almost a year old, this consolidation phase, but it still doesn't show any willingness or any desire to roll over. And this is where you have to be patient. What this tells us, what this market condition tells us, or has been telling us, is we have big ranging days, down days, up days. Okay, you have a little one there. You have a big range that day, big wick to the bottom of that candle. The market is actually being supported. Here we are, about 25,000 is like the key level. So you have 15,000 down here, you have 25,000 up there. Interesting numbers, 1,000 points. So what am I doing? That's 10,000 points, isn't it? 15, 25? Yeah. So how many points? 15 to 25. Yeah. Yeah. A lot of points. Yeah. Yes. 10,000 points. My goodness, what am I saying? 1,000 points. 10,000 points between here, which is not that far. You know, 2016. That's going some. So this is the condition that the market is in. It's volatile. We know why it's volatile. The price action is confirming that. Is it a time for, you know, a rollover? We don't know. We're not here to make that judgment, but it tells us, it gives us an inkling of what we can expect in the faster time frames that probably you, I, and you know the traders are out there are looking to trade. From a VPA perspective, and whether this is a major distribution phase, you have to look at the candles, and you have to look at where the wicks are on the candles. And each time there has been an attempt to sort of, as you said, to roll over. There's been a lot of buying coming in for all sorts of reasons. You can see under here the wicks to the bottom of the candles. This was the latest one here. It looked like it had a big fall. Market is then pushed up again, pushed up once again. This is an up candle, not a lot of volume underneath it. So, you know, at some point it is going to roll over, but it doesn't look like it's going to happen at the moment. And as I said, and it is also being supported by, you know, good news. The market wants good news in terms of the trade tariffs. You know, if there can be some agreement, maybe there's going to be some more QE from the Fed. Is the Fed going to reduce interest rates? But you as a trader, you need to see what kind of state, we call it the C state. What sort of C state is the market in? Is it volatile? Is it, you know, is it very choppy? Or is it just very serene? Is it in the doldrums? And you can only make that judgment by looking at, as I said, on this case, I think you have to go to the slowest time frame chart, which is the monthly chart. It doesn't tell you whether it's going to be a down day or an up day, but it tells you the state that the market is in at the moment. David, do you want to say anything to that? Yeah.
Sorry, I was just doing something else. I was just on another screen. Apologies. All I would say is, going back to that monthly chart, that could be a 1 minute chart or a 1 monthly chart. Makes no difference whatsoever. The key is, obviously, you've got the volume point of control there. We're trading in that range. It's the heaviest concentration of volume. But as Anna said, if you look at the structure of the candles, if this were climactic price action, you would see an awful lot of candles with big wicks to the upper body and clear selling into weakness. You're not seeing that. You're actually seeing the inverse of that. You're seeing buying. As the market falls, you're seeing the buyers come in. The market makers, big operators, whatever market it is, it doesn't matter. That's what it's telling you at the moment. And it's simply about being patient and waiting for this market to break. When it breaks, then you're looking at back to levels and flow. You're looking at the key levels for a breakaway and a continuation of the trend. That's our reading of the situation. We could well be wrong. Others will disagree. But if you look at it in that context, then that's the way we read that particular chart at the moment. But as I say, it could be a 1 minute chart. The fact it's a monthly chart, the way, it makes absolutely no difference. It's just reading the chart, the price action, and the volume accordingly. Did you want to switch over, or? Okay. Just going to switch over onto my ninjas on this side, and we'll have a quick flip around, see what's going on across the other markets as well. Just get Anna to do that. Just change screens. Yep.
to reiterate what David has said, this happens to be, I'm looking at the monthly chart because I want to understand what the kind of, if as I said, the C state, what is the condition of the market at the moment, what can I expect in terms of condition and C state on the faster timeframes. But this, as I said, this could be any, this chart could be any time frame, and what it also tells you is basically, as I said right at the beginning, if your market of choice is in a, as I said, moving up in a gentle sort of a trend upwards as it here, which is very nice, certainly from an investment point of view, but from a trading point of view, where each day you have these narrow, you don't have very wide price action, and it's it's tough going basically. Maybe when you see this, is it time to move to another instrument which is going to give you a little bit more action, a little bit more momentum, because in fact this is actually I hate to say it, it's a dangerous state, isn't it, David? When it's the longer you're in a trade as a trader, the more risky, the riskier it becomes, because you're at the mercy of unexpected news, and certainly at the moment there is a lot of unexpected news. It's just a case of recognizing, as I said, the state that the chart that you're looking to trade is in, and if does it suit you. The other thing is, does it suit you temperamentally? Maybe you like a sort of nice gentle upwards or even down move. Although having said that, when things start fall, they do tend to fall a lot faster than they go up. So there's lots of things to consider. So what we're going to be doing is, well, certainly David is here, is not focusing on just one. If there's nothing going on in maybe the YM or the yes or whatever it is, then we will go and actively look at maybe another instrument and another market, because as I said, we have the luxury of being able to do that. I do appreciate you can't, maybe for funds, or maybe you just don't want to. But this is how we approach day trading and trading futures. With spot forex, it's slightly different. You do have the 28 pairs, so it's easier and it's a lot cheaper to put a little portfolio together, as it were.
Just switching over. I'll just flick my screen up. We should be seeing that any minute now. Hopefully you can see the currency strength indicator on the left and 4 charts spread around the screen. Just move that out of the way. This is actually the currency future. This is the 6J, the yen, and it's the inverse of the spot. So this is yen dollar. This is not dollar yen. So what we're looking at here is basically, if you like, an image for the yen. This is the yen down here. We're seeing some decent selling of the yen, and that's reflected in this particular pair. As I say, when you're in currency futures, everything's quoted against the dollar, so it's yen dollar, not dollar yen, as in the spot market, which is why these numbers up here are the inverse of what you see in terms of the spot rate. So I've just got an eye on that purely because I want to see what's going on in terms of indices. Just go over onto the currency indices for a moment, just see what's going on there. There's been some big spikes up and down. This is all 5 minutes, so it's all pretty quick. This is top left is the yen index, top right dollar, bottom left is the euro, and bottom right is the pound. We've had this spike on the pound, so that's presumably Brexit related. We've got an equal spike down on the dollar. Not sure what's triggered that one. This is the move we're seeing in the yen. So we're seeing decent yen selling, and that of course is reflected if we hop over onto the indices themselves. Let's just go over to that workspace. There we go. This is what's going on in terms of the indices right now. Top line is 5 minute, and bottom line is the daily chart for the equivalent. So we've got the YM, the NQ, and the ES on the top, and the same down at the bottom here on the daily. And we've had this very strong move. We're now seeing a pause point. We've got the volume point of control on all three, as you can see. And if you're trading an index, Anna said I tend to trade the YM more than anything else, which is true. Probably the YM more so, trade the NQ from time to time. Why do I trade the YM more? It's just a personal feeling. It's a personal view I have. I find the price action a little bit more measured. I find it, in inverted commas, easier to make money in that particular index. it's a little bit more even paced. I also tend to trade it on Globex only a lot. So it's again, it's much more even paced price action. But whatever index you're trading, have all three up in whatever different time frames you're trading, because it will give you different perspectives. I talked about it before. You do see divergence between the three of them. Generally speaking, as you can see today, they are pretty much unified, but you do see divergence where maybe you'll see one that's lagging, maybe even on some days you'll see an index that's down whilst the others are up. The NQ might be up, the YM might be down. But if the NQ and the ES are both up and yet the YM is down, then it's a pretty strong signal that you can expect some pull through into the other index. It's just a great, it's another tool to add to your toolkit, if you will, to help to reduce the risk on making trading decisions, because that's all it's about. It's just trying to get as much information as you can that's realistically available without doing, a thesis. To get that information quickly on board, or from whatever source it may be, whether it's related markets in the same group of indices, sector, whatever it may be, just helps to give you that basis for decision. Right now, what we're waiting for is we're waiting for these markets to break. They're all in bullish sentiment at the moment, and they're just in a pause point on the faster time frames, trading around the volume point of control. Just dropping down onto the dailies. Let's pull that across over there to have a look at the ES, but they're all pretty much the same. In fact, let's stick with the YM things. We're doing that one. Let's pop that over there. There we go, pop that up full size. And basically what we're seeing here is really what I was saying earlier on about looking at the chart structure and looking at the relationship between the wicks to the upside. If you've got more to the upside, more to the downside, what the volume profiles look like, is there more buying than selling, more selling than buying, etc., etc. And we've had two of these. We've now got this one very deep, decent volume under that one. Reaction got up here, little bit of weakness, selling, yeah, no problem. But now we've got the same again today. We've got this very, very big wick. You may not be able to see it, but it plunges down here. This was happening overnight when we had a big spike in volatility. Markets plunged, then they recovered. Lots of volatility all over the place. But if that shapes up as a daily candle with decent volume, this, remember, is building in real time, so it's not closed off at the end of the session yet. But if it does close with decent volume, it's yet another indication that the market's fallen, but it's recovered. Market's fallen, but it's recovered. So all things being equal, putting politics aside for one moment, one would expect to see this market continue tomorrow with some follow through, assuming there isn't a political intervention or a political statement or a political Twitter, whatever it may be. That's what you would expect to see. Then it's a question of saying, well, how far is this market like to travel? What is in the way? What barriers are in the way? What technical barriers are in the way that are like to cause it to pause? We've got a slightly lighter volume here to move through up to 26, maybe up to 600, 700. We've got some relatively minor resistance on the daily chart before we get back into this great wedge of volume up here, and on we go. So all these things come into play in terms of trying to understand what the broad sentiment is right now. Okay, now what we're looking for, let's hop over onto the multiple time frames. We've just got the YM itself, which is this one. I think I've got the YM on here. Here we go. This will give us perspective. I've got a very fast chart here on 15 second. This is on 3 minute. I've got 5, and I've got gold is moving, by the way, as well. 10 minutes, 60 minute. We'll hop over onto gold in a minute, and that's over onto daily, which you've already looked at. What's interesting about this chart and the volume profile, this is 2:30. This is the open of the US cash markets, physical exchange coming on top of Globex, which is running up to here. Normally, you would expect the major volume to appear at this point and then to attenuate lower. What we've actually got is we got this absolute ton of volume came in here around 3 o'clock our time under this candle. Clearly, market makers are involved with that. The big operators are playing in the market. We've got a volatility triggered as well. So what we're expecting to see is markets congest, which is what we're doing right now. And now what we're waiting for is a break away from that to the upside. With the trend monitors bright blue throughout, this is on 15 second, remember. We've got a little bit of a pause point here on 3 minutes, what you expect, because we've got a pause point around the volume point of control. Nothing on 5, nothing on 10, and nothing at the moment on 60 minute either. You wouldn't expect to see any change there. This is transitioning from what was a bearish phase into a darker phase of price action and come out the other side back into bullish. So it's reverted back into bullish sentiment on the hour. Just waiting for that, and it's about patience. It really is about looking at the chart, various time frames. That's on 3. Let's have a look on 5, and trying to understand where you. Let me put this up to slightly slower. Let's put this on 15, for example. And what that tells you is we're trading around inside this candle, and therefore what we're waiting for is a breakaway, a clearance of that level. So we're looking at maybe up to, probably not up to 500, but certainly getting on up that way, because once we're up at that level, then we've cleared well away from this particular candle, and we're just moving off into another phase of price action. So it's all about being patient and waiting the whole time. Just head over onto commodities, see what's moving there. Top line is oil, and the bottom line is gold. We've had quite a big sell-off in gold over the last few hours or so. This is the daily chart for gold. There's a, just move that out of the way. Just keeping an eye on everything here. There's a very strong level of support coming in. This is on the accumulation distribution indicator, and the thickness of the line denotes the strength of either support or resistance. So the thicker the line, the stronger the level. And this is a pretty strong level here, which is now coming into play as we duck below $1,500 an ounce. It's come into play several times already, as you can see over here. Each time it's tested, it's closed, held above it, so it's a pretty strong region. If that's taken out, then the likelihood is that gold will then decline, and with this low volume node in the way here, could go all the way back down to here, even back down to 1440 in the longer term. But having said that, and the drivers for gold are many and varied. You've got the dollar, you've got inflation, you've got safe haven, and any one of those could change literally overnight. Wars are a big factor in terms of gold, safe haven, anything that spooks the market. You'd like to see a flight to safe haven assets, of which gold is one. So I've got gold along the bottom here. This is the December contract. Got this on 1 minute, 5 minute, and on the daily chart here. And of course, that will also be impacted by the dollar. As I said, I've got that set up over on another workspace, which is, where are we? There we go, that one. So on this workspace, I've got, sorry, beg your pardon, this is back to the, I've got the yen on here. I've got the yen, the 6J on here at the moment. This is the yen, which is falling steadily. This is on 15-minute time frame. If I increase that to, put that up to 30 even, see how that shapes up. There we go, that's what's happening. This is the pound buying, which is pretty strong right now, in fact, very strong. It's almost going up vertically. Indeed, the same is true of the Canadian dollar, this purple line here. So you've got very strong buying of the Canadian, strong buying of the pound right now, counterbalanced with strong selling of the Swiss franc, this green line, and you've also got strong selling of the Japanese yen for the time being on the faster time frames. Dollar's kind of rolling over a bit. It's had some buying, but it's now starting to pause a little bit. Let's just go back onto the indices again. Let's just see what's shaping up there, if anything. Still rotating around the volume point of control, so nothing happening there. Okay, let's put, that's the yen again. Let's just go back onto commodities again and see what's happening with gold. Okay. All right, let's stick with the YM for a moment. All right, there we go. Okay, there we go. Okay, let's see if we get some price action. And even on a 15-second chart, if that's your flavor of trading, if you're comfortable trading at that speed, absolutely fine. Principle is exactly the same. It's read in conjunction with volume price analysis in exactly the same way. The indicators work in exactly the same way, as you can see here. And it's a great way to learn volume price analysis as well, to do it on a really fast chart. You can see everything building in real time, very, very quick. Whether you want to trade at that speed, it's up to you. We do from time to time, it just keeps us sharp. And what you can see here is, let's pop that back up again. Just looking at the volume profiles here. You've got a market that's rallying here. We've got low volume coming in terms of the buying that's associated with an uptrend. So it doesn't look terribly strong. We've got a level that's building here is coming into play. That's quite a strong region, literally at the couple of points above. So it's kind of capping things off for the time being. But you really have to look at the volume. And what you're looking for constantly is you're looking at the relationship between price and volume, and you're looking for benchmark candles. You're looking at these high volume candles, the low volume candles, and you're trying to get a feel for, well, is this high volume, medium volume, low volume? And in the context of the shape of the candle and the construction of the candle, you know, is it confirming the move, or is that move running into some weakness? The trend monitor, you can see here, is transition. We've gone from this little bearish phase here. We've gone into the transitional colors of the darker red, the darker blue. We've now come out the other side. Now we're into bright blue, helping support. And bear in mind that you know, this is 10 points, 15 points, which on a small YM is $5. So you know, it's still $50, $60 that you can take out of the market in a relatively quick period within a matter of minutes, which you know you may be comfortable with. You may trade multiples of these. Now we're looking at the volume rising, which is good. We've got a little bit of wick to this upper candle, but it's nothing too serious. A little bit of selling coming in maybe on that particular candle. We're moving up into relatively low volume areas on the volume point of control histogram. Got another one with a little bit of weakness there. So we've now got two candles which are showing signs of weakness. Really what you want to see in a strong move is these candles closing up here. You don't really want to see these wicks up here, particularly with higher volume. So with higher volume, this candle, you're expecting the market to roll over a little bit, which is exactly what it's doing. Because it's what you expect it to do. Because if you read volume and price, then you'll understand why it's doing it. You've got a pivot to the upside here. So this is just giving a further confirmation of some short-term weakness coming into the market. We've got a nice level of support in below here. So this is pretty strong down at 64, so that's 7 or 8 points below here. The selling pressure doesn't look terribly strong because we've got two candles to the downside, but look at the volume. It's hardly, and in fact, it's falling away as well. So again, if this were going to fall away dramatically, you would expect to see these two candles associated with candles moving in this direction, in other words, higher. They're not, they're falling away. So it's just telling you that at this level, and bear in mind, this is a very fast chart, but at this level, you know, we've got, it's not strong selling that's hitting the market right now. Let's just pop that out of the way and see how, let's move out from the market a little bit, just calm things down a bit. This is up on 15, there we go. So, you know, we're still waiting to break clear of this, if that is our level that we want to be free of. If we're comfortable getting in at 26,500, then that's fine. It'll be well clear of this, the top of this volatility candle that's appeared there. Okay, just down on back onto 15 second. Nice little signal there. Lots of volume. Big wick to the upper body. Nice upthrust candle, and another one. Not so much volume under that one though, but there certainly was under this one. So, you know, weakness there. It's not looking terribly strong for the time being. And it's building a kind of level here. So if you want to see a continuation of this, we want to see it through 78, 79 on up to 80. There we go. Not very strong on the volume. Let's see what this one does. Hopefully we want to see a nice widespread up candle without a big wick. We've got a, well, half a body wick there. We've got a lot of volume under that candle. So again, it's looking a little bit toppy. It's not looking terribly strong. Market's struggling right now to really get some momentum behind the move. Wick to the lower body, it's a nice sign. You know, we've had a bit of selling come in the market, but you know, the market supported it, but not hugely. But it's a positive sign. If that was going to roll over, then it would close down here, but it hasn't. It's closed up here. So there's decent buying in there. That's okay. Little candle, small volume. That's all in agreement. So we've had a bit of a gap up. We're going up again. Nice. On we go. Okay, that's nice. No anomaly there. Obviously, you've got decent volume and a nice widespread candle, which is what you want to see for confirmation. Okay, now we're starting to break away on the slower time frames. Here we go. It's all about patience, and it's all about setting your levels. Whatever level you're comfortable jumping in, you might be comfortable jumping in now, saying, okay, fine, I'm at my level. I can see I've got a low volume node up here. I'll be looking up at the 5, 10, 15s maybe, and taking it from there. Now we're up to 26.5, which is what I said about this candle here. This was on 15-minute. Once you clear 500, then that may be your comfort level to jump in. That's fine. It's okay. You might argue and say, well, hang on a minute, I've given up, 30, 40 points in here. Well, that's all about your comfort level, your risk. If you're comfortable getting in earlier, then that's fine. Some traders will, some traders won't. You'll all have different levels that you want to get into this market and that you're comfortable getting in. Let's go down onto, sorry, I've got these the wrong way around, beg your pardon. Let's change this to 10 minutes. So we've got 15 second, 3 minute, and 10 minute across the top, and let's make this 15. There we go. Okay, now we've got a better picture. Personally, I prefer to have, I have different layouts for different things. When I'm on, for example, on tick charts or time-based charts, let's go over onto tick charts. Can't remember what I've got set up there actually. This is on oil, apologies. But basically when I'm on tick charts, I like to have the fastest tick chart here. This is on 377, 841 up to 1597. And when I'm on time-based charts, as on these, then I tend to have it this way around. Don't ask me why, it's just the way I happen to do things. You may prefer to have it the other way around. You might like to have, I don't know, going right to left or left to right. Where are we now? Still struggling to get through 26,500. Let's have a quick look and see what the yen is doing. Let's go over to these babies here. There we go. Here's the yen up here. Okay, what we want to see now is we want to see a nice break away from this congestion phase. We've been in sideways now, which is why the indices have been in sideways. We want to see that breaking lower. This is the euro. There's some decent selling on the euro. Pound is still trying to rally. The dollar's kind of chopping around, going sideways at the moment after that fall. But this is the one we want to keep an eye on. Let's just see what's happening on the yen futures. There we go. Starting to see that drop, and it's a nice way of looking at the yen. The yen, as I say, all the currency futures are quoted against the dollar. So if they're dollar CAD, for example, then it's CAD dollar. So it's the inverse, and that's the same here. It's the yen dollar. It's not the dollar yen. So what you're looking at here is a straight reflection of what's going on here, for example, whereas on the spot market, it's the other way around. So it just makes life a little easier, if you will. So this is a nice move developing. This is on 3, 5, 10 minute and the daily. And you can see the trend monitor steadfastly red throughout, holding us in. Very, very nice, very straightforward, very comfortable. Nothing really to frighten the horses there. All I would say is that this is on, what are we on, 30 minute here? Let's have a look. Oh, 15 minute, okay. The yen is obviously getting very stretched now, very oversold. So, again, you'd be keeping an eye on that. We've had this very strong move in the Swiss franc, highlighted that one. Strong selling of euro, strong buying of the pound, and the strong selling of the Canadian dollar continuing, which is very nice. So there's some really nice moves in spot forex that you'd be trading right now because those currencies are all moving strongly higher, strongly lower. Match them up and off you go. Very straightforward. Then you're onto the currency matrix to sort out whether that flow in sentiment is universal or whether it's a particular to one currency pair, which is in opposition to the others. Then you're looking at the array for strength of trend and the possibility of reaching overbought and oversold in terms of the currency pairs themselves. Let's just go back to the indices again. Just go through to the primary ones there. There we go. Okay, that's what we're seeing. So this is moving nicely now. This is on 5 minutes, so we're doing a direct comparison on the three indices together. We've got nicely rising volume here on these last two candles on 5 minute on the YM, so that's no wicks and nice solid bodies. That's nice to see. Exactly the same on the NQ and exactly the same over on the ES, which is the S&P 500. So that's all very hunky-dory. Let's just go back onto where we were on the multiple time-based charts. There we are. Oops, just pop that out of the way. There we go. And if you're running a 15-second chart or a 30-second chart, maybe a 1 minute chart, it just gives you a heads up as to what is going on inside this little candle here. Because remember this, there's 4 of these to the minute, so you've got 12 candles here in one of these. So it just gives you that inner view, if you like, of what is going on inside each of these candles as it builds in a slower time frame. And the same is true of this one. You've got 3-minute candles, so 3 of these pretty much go into the 10-minute chart. You can have a 9-minute chart if you wish, but basically you've got 3 of these over here. And that's why multiple timeframes are so important to trading. It just gives you that all-important perspective, from the volume perspective, from the price perspective, from the indicator perspective. You know, if you get a volatility trigger on 15-second, doesn't always appear on a minute or a 3-minute, but it just gives you an insight as to why the markets have perhaps paused at that level and is congesting, because if there's a trigger on the volatility indicator, then that's what you expect to see. On up we go. Okay, we're now up to 20, so we're 20 points clear of the 500 level, which was down here, which is very nice. Trading is not stressful. Driving to Italy with two elderly dogs in the back of the car who are not good travelers is stressful, I can tell you. But this isn't. And driving back, so. But this is not. It's enjoyable, it's fun, you're making money. If you've got your stop losses in there, it's fine, you get stopped out, so what? No one's died, nothing serious has happened, you've lost a bit of money, big deal, move on, forget about it, and just carry on, get the next one. That's how you have to view it, and you also have to view profits in the same way. Okay, you had a winning trade. You're not capable of walking on water. You're not God's gift to trading. You just happen to have made a winner. Good for you. On to the next one. It's as simple as that. You just have to have an even balance to wins and losses. That's it. You're not euphoric when you win. You're not decimated when you lose. You just have to find an even temperament to all this, and don't take it personally. The markets don't care about you. They don't care about what you do, where you are, how much money you've made, how much money you've lost. It's just there for you. Just trade. Let's just hop down onto the daily for a moment. Okay, so we've got on the daily, we've got a little bit of a resistance region coming in. It's not huge, it's not terribly strong. This has only been tested twice and held, so it's not a major level. It's not, it's nothing like the level of this guy here, but nevertheless, it's maybe something that'll come into play later in the session if we continue higher. Okay, this is a nice little this little phase of price action here. This is classic VPA. You've got rising price, you've got rising volume, and you've got widening spreads. So what that is telling you, it's very positive. It's a nice signal. It's Wyckofian principles that we teach in the forex trading program, but which can be applied to any market, because even though it's a forex trading program, the principles that we teach can be applied anywhere, any time frame, any market, any instrument. Okay, we're still chugging along nicely. Over onto 15 seconds, and what have we got? We've got a little bit of weakness coming in. We've got the volume point of control. If you remember, this was at a much lower level. Remember, these indicators are not static things. They're not anchored in on a chart and never move. They are moving constantly as the markets move. So every time the volume is building and rebuilding, the volume point of control is moving on to the next level. It's helping you make decisions. It's helping to identify where that point is, where the market is in congestion. We're moving up nicely now, nice and strong. We had some weakness come in here on this wick candle here. Good volume. Nevertheless, we've gone through that, moving up into low volume, constantly building and rebuilding the whole time. 33, 34 points up from 500 now, which is very handy. Even if you're only trading one contract at $5, that's still $150 for what, half an hour's work. That's pretty handy. We're well clear of the of this candle, and we're just moving along quite steadily, quite nicely. Just go and see what's happening to gold. Let's go on to the commodities. Okay, it's still holding up there. no great movement there. That's oil at the top. This is gold at the bottom here. Okay. Let's go back over here. Where are we? That one. There we go. Oh, sorry, I was. Beg your pardon. Sorry. It's just enjoyable as long as you understand what you're doing and what you're looking at, and it's just fun. Oh, sorry, I was in a little world of my own there. Do all of your indicators work the same for all indices? Yep, absolutely. Who asked that? Oh, right. Is Ninja only recommended? Well, that's an interesting question. I wouldn't say it's only for more experienced traders. I'd say it's what we generally suggest is that if you're a novice trader, then it's probably not the place to start, particularly if you're talking forex. But even forex now with MT5, you've got the option of multi-assets on MT5. So for forex traders, what we suggest is they start with MT5 if it's a multi-asset approach, and then migrate to NinjaTrader, only because with NinjaTrader you've obviously got the platform, but you've then got to incorporate your own brokerage. You've got additional fees in terms of data feeds, for example, so you have to pay for data feeds. You've got commission, you've got exchange fees to deal with. So you have all of that to deal with, and I generally, as a rough rule of thumb, I would say that the vast majority of NinjaTrader traders are either trading, well, they're primarily trading futures, I would say. Not so much spot, but certainly futures. So you will find an awful lot of commodities, index futures, commodity futures, and currency futures on this platform, and that's really what it's geared for. And Ninja have their own brokerage, which they acquired several years ago now, and they've incorporated that. But it's a more, say, sophisticated. It's a little bit more complex, I suppose. And really, that's the way we view it. It's just a step. We find that we have a lot of customers who start with MT4 or MT5 and then migrate across to NinjaTrader for various reasons, primarily because they want to trade other markets, but particularly futures markets, and not. Yeah, we have TradeStation, which we're working on at the moment, which is an immensely powerful platform, and it just has some extraordinary features on there, which are certainly not available on other platforms. It is very powerful, very flexible, and really covers all markets. You find with a lot of platforms that it's a struggle to get some markets, for example, UK markets, for example, but certainly with TradeStation, that's not an issue. So it's just horses for courses. It's the same with brokerage. We use Interactive a lot, as I'm sure you already know, but that is not a brokerage account for beginners. I can assure you. We still make mistakes. I still make mistakes with it because it's phenomenally complex and it's not intuitive either. So it's not a straightforward platform. Let's just see what's happening on. Let's just go back to where we were. Oh, we got on Renko. Let's have a look on Renko. Oh, this is gold. Okay, this is gold on Renko. Anna often has Renko up in the mornings on MT5. This is Renko on NinjaTrader. Renko is a fantastic charting application to smooth out price action. If you find price action a little bit choppy and you find it hard to read, then using a Renko chart, this is on gold, this is the December contract. I've got the indicators on here, they work exactly the same way. These are the trend dots. This is the trend monitor. The trend dots work very close to the price action, which is why you see these changes coming in. We've got a reversion to blue here, then back into red, all the way down to red. We've got a little bit of blue coming in here again. Looks like we're going to pick up on red again. But the trend monitor doesn't transition. It doesn't reflect that. So the two of them working together are great to keep you in a position. The trend dots will always change first because they're very close to the price action. The trend monitor doesn't because it takes a more considered view. It's been designed to help to keep you in through those portions of price action which are the most damaging. And it is the most difficult thing to do in trading, is to hold a position in a market when you've actually got some profit in there, because the natural instinct is to take what you have. That is how we're built. That's our DNA. If you've got some money in the bank, the last thing you want to see is it drain away. So you shut the door, you lock it away, and then the market continues onwards. And the problem is, from a trading perspective, is that if you do that constantly, then all that will happen is your trading account will probably dwindle. It won't collapse, but it won't go forwards, because you're closing out a lot of small losses, but you're also closing out some small winners. And generally you'll have more losses than winners. So if you're doing 6 losses to 4 or 7 losses to 3, those losses will outweigh the smaller winners, and therefore your trading capital will slowly decline. And the key is to bank bigger winners. They don't have to be, humongous, but they've got to be bigger and outweigh the small losses that you constantly build up all the time. And if you can't stay in a trend and you're frightened out all the time, then that's where the maths of trading doesn't work. It will not work for you because it simply cannot. And therefore you have to find a way of staying in when a market moves against you. You're in a decent position, you've got a reversal building. You have to interpret whether that reversal is a true reversal, in other words, from a primary trend higher to a primary trend lower, or vice versa, or whether it is simply what we call a secondary trend. In other words, it's a minor pullback or a minor reversal. Volume price analysis helps you to understand and interpret that. It's one of the powerful applications of VPA, because if you can do that correctly, you will then not be frightened out of a position, because if you understand what you're looking at and you think, yep, okay, I can see what's going on. I'm in a, say we're in a strongly rising market, the market then pulls back against us. If we see the volume falling away with that fall in price, then we can be pretty assured that this is a secondary pullback. It's not a major reversal top, purely because we've got an anomaly. We've got falling price and falling volume. If we had rising volume and falling price, we will be seriously concerned and probably get out of the market. That's the power of VPA. Again, it's something we explain in great detail in the Forex education program, but can be applied to all markets. And it's so powerful. It's probably the one aspect of volume price analysis which will ultimately dictate whether you can succeed in this business or not, because it's that principle that dictates whether your trading capital increases or simply declines slowly. Sorry to bore you with that, but yeah, I'll just go back to the charts and I'll answer the questions. So that's gold on the decline. Here we are. How many points are we up now? Goodness me, we're up 55 points. Very nice. All very leisurely. No great stress. Great way to make a living. Right, what were the questions? Let's have a look. Right, Linton. One final. What percentage do you think candlestick reading helps someone trading? Or with VPA, do you think it doesn't help at all? Gosh. What percentage do you think candlestick reading helps someone trading? I would say 100%. You have to be able to read candlesticks. I mean, you've got to remember, we've been doing this for many, many, many years. But if you're sitting here and you've got the time to do it, if you've got the luxury as we have, do it day after day, week after week. When we first started, we didn't. But you have to find ways around that. Find time to study in the evening. Put up a 1 minute chart and just read the chart, understand what it's telling you, apply the indicators. That's how you study and learn, and ultimately it will come. But anyone you talk to, there are traders in the VPA forum on the program who've been doing this for many years, and that's what it takes. And we get emails from people who want this to be a quick fix. They just want an answer, something or the other, and they want to make money next week, and it doesn't work like that. I'm sorry if that's not what you want to hear, but that's the fact of the matter. This is like any other business. It takes work, effort, and you are going to get hit. You have to accept those lessons and move on. And if you can't, then it's just not going to work. It's as simple as that. We don't make any bones about it. It's just the way we are. It's the way we've always said things. We don't varnish over things. But if you're prepared to put the effort in and prepared to study, then the world is truly your oyster, because you can make money. And we have traders in the forum who make money consistently, and they have they are making a nice living at it. How do you get tick volume for FX with interactive brokers? With difficulty. Interactive brokers do not offer. Interactive brokers, you've got to remember, are brokerage. They're not a data feed provider. A data feed provider will provide that information. TradeStation have, I think it's something like 100 years of data. You know, they have all that information. They have that. That's their business was built around the data feed. It's immensely powerful. Interactive brokers are a brokerage. They don't offer tick data for spot forex. It's just a fact of life. They're not going to change because, as far as they're concerned, it's not part of their business model. They're not really interested in providing tick data for that particular market. It's just a fact of life. Sorry about that. It's just that, you know, we've asked the question, and you know, I'm sure you've seen the question asked many times in the forums as well. Just not available. You both sound super refreshed from your trip away, by the way. Thank you. We did need the break. I have to be honest. It was a bit of an odd 2 weeks. I won't bore you with that, but we did have a week sort of where we pretty much did nothing and just sort of chilled out a bit. So thank you for that, and much appreciated. So there we go. Been going an hour or so. And you know, going back to where we started, it's just patience. We were, you know, around the volume point of control here. We were looking at this volume candle. We were looking at, you know, where we might get in, and we thought, okay, well, you know, perhaps we might low 8 to 500. We might have gone in at 480, 490, and you know, this is all looking nice. We've got the trend monitor supporting. We've got the trend line here, which is helping to give us a perspective on how far we are away from the midpoint here. And let's just, you know, where is this going next, this market? Well, let's go up to 15. We're in low volume territory here in terms of volume point of control. So there's nothing in terms of volume that's going to particularly come into play. We've got some very, very strong levels here of both price-based. We see these strong levels, this red and the blue. This is on the accumulation distribution. I mean, this is a massive, massive region. You've got the volume point of control itself. You've got a ton of volume here. And you've got these two channel volumes, regions here, this very strong, what was acting as a ceiling of resistance, and you've got this very strong platform of support equally below. And once you get channels like that building, then there's only one thing you have to do, and that's be patient. Just be patient. Wait for the market to break away. It will, it has to, every market does. No market stays congested forever. It can't. Doesn't happen. You therefore just have to do one thing, wait and be patient. And when the market breaks away, have a look at what's above in terms of the barriers to that move. If we're moving to the upside, have we got some high volume? Have we got some price-based resistance which is going to come into play? Where have we got our low volume nodes? We've got a low volume node here, so you know, we shot through there and up into a higher region. This is, you know, and this is how to read the chart. And once it comes into play, then you just read it accordingly. And now what we would do is we would drop that out of the way. Let's go up to the 60-minute chart. See what we got there. Just reload that. Not sure I've got the accumulation distribution on here actually. Should be. Perhaps I haven't. But we had the accumulation distribution on here. We'd have levels there. You can also see as we're moving higher, the volume here is falling away on 60-minute. So from a 60-minute perspective, you know, this market is going to should travel through here relatively easily, purely because the volume perspective, or volume from a resistance perspective at any rate in this case, is getting lighter and lighter the whole time. So you look at volume, you read volume in exactly the same way as you read price-based support and resistance. If you've got deep areas of volume, then that volume is going to cause the market to pause, purely because you've got a whole smattering of orders lodged around there. You'll have traders trapped in weak positions. You'll have orders waiting to come into the market. You'll have all sorts of stuff in there. And that's why the market will pause. The other reason for it pausing at that is if the market's paused there before, it considers it important, and therefore if it considered it important in the past, it'll probably consider it important at this point. Equally, if it's a low volume node, somewhere where the market's moved through pretty rapidly, then it's an area where the market is not considering it very important, and therefore it's not likely to consider it important this time around. Nice candle there, deep wick to the lower body, tons of volume under there, lots of buying, pushing the market higher. And on we go. Sorry, so there was another question. Okay. Right. Right. Like I said, most I want to when I'm fire right. When I'm in 5 minute over, should I wait until 15:30? Right. Okay. I think, Guy, and what you're talking about is really looking at this. It's something. In fact, it's something I touched on this morning about the whole business of multiple time frames. Because as a trader, you have to accept the fact that whatever you're doing in your chosen time frame, in a slower time frame, the inverse will be happening. And if I move over to Anna, she'll explain it in more detail. It's what I talk about when the analogy I've used is, and I've used this many times before as well, is of a blinkered horse. Because horses are blinkered to focus, and you have to restrict your vision to whatever it is you're trying to do. Because if you try and cover every single time frame and you're looking from a 1 minute right the way out to the daily, and in a way what you're looking for, I suspect, is perfection. In other words, all my indicators and everything are lining up 100% to tell me to get into this market. I can guarantee you, and I said this morning, in fact, I can guarantee you at that point the market will reverse, because what you're looking at is either heavily overbought or heavily oversold. And it's the point at which a lot of traders will jump in because of the fear of getting into a market and making that decision to trade when perhaps everything isn't perfectly aligned. Nothing will ever be perfectly aligned in this business. You have to accept it is an imperfect world. You have to accept you make a decision based on the criteria you have, based on the information, as much information as you can glean from all the various different charts, timeframes, and markets, but actually restrict yourself to what it is you're trying to do. If you're a scalping trader and you're on the 15-second chart here, for example, you're not going to be down on the 4 hours and the 2 hours and the hour. That'll be doing something totally different there. I mean, it might be bearish, it might be bullish, who knows? You've just got to restrict yourself to the time frame, your time window, your 3 time frames, the 1, the 5, the 15, the 15-second, the 1, the 2 minute, whatever it is, the hourly, the 4 hourly, the daily, and just focus on that. If you're on a slow time frame, if you're on a 4-hour daily chart, you don't give a damn about what's going on a 15-second chart or a 1 minute chart or a 5 minute chart. It's of no interest. It has no relevance to you whatsoever. Your focus is on the 4-hour, the 2-hour, the 4-hour, the 8-hour, the daily, whatever it may be. So you've really got to just restrict yourself in that way. Take a slice of time out of the market, if you will. You're taking a slice of price behavior, focusing on that, trying to make money in that time slice, and then getting on to the next one. I'm going to move over to Anna because she can probably show you on her charts.
Okay, this is for those of you who may have not seen these indicators before. This is the specialist indicators that we've developed for the forex market, where it's deconstructed into the individual currencies, where we can see the flow into the individual currencies, and by looking at the flow and understanding if the flow is in the Japanese yen, as we can see here in the magenta line, it is also telling us what market sentiment is like to be. So if the yen, and we can see here the Swiss franc, is being sold, we know that indices are probably rising. The market is in a happy mood, as it were. Now, multiple time frames. Because the forex market is very much, the 24-hour market is really 3 separate markets. It's 3 very distinct trading sessions, and with London taking sort of 43% of all the forex business on a daily basis. This is now over a 6 trillion day market. So you can see why so many people are attracted to this market. But let's look at these indicators and let's look at the multiple timeframes. This is how I set up my CSIs with a matrix. And if I explain how I set it up, it will really become clear what you're looking at in terms of what is likely to be happening on the chart. The reason I have the 1-hour chart up here is not because I trade the 1-hour chart, but it's a great chart that I can hover over and I can see the change, if you like, as the sessions the sessions cross over and new traders join the markets. So this is the euro that we have along here. This is the gold line. If we look up here, you've got to take 2 hours off the time stamp that's there. So that says 4 a.m., but it's actually 2 a.m. because of the way MetaQuotes reports the time on the charts. It's in real time, but it's 2 hours delayed. So this was overnight in Asia. Now at this point here, we are 8 o'clock. It's actually 6 o'clock. So it's the start of the European session. We had a very nice rise in the euro this morning. It's quite a dramatic rise in the euro this morning, and we can see here an equally dramatic fall in the US dollar. But when we get to this point here, and we're at 1600, which is 2 o'clock, we can see here the euro is about waiting for it to turn over. We said this in this morning's session. It looked like there was more upside to the euro. It hadn't reached an overextended phase. This 80 number that you see here and this 20 number, it doesn't stand for anything. It's just a visual cue to tell us that possibly a state of overextension is being reached. Now down here I've got the 12-minute chart. If I track the euro, you can see this is a fairly smooth rise and then a rollover. But you can see on the 12-minute, we have, in this move higher before the rollover, we see here this is 17. Let's go back here. This is about 16. It's about here. This is the point it actually sort of rolled over, matching with the hour. It isn't smooth. It's because it's on a faster time frame. The yen also, the euro yen, looked at that point to be maybe a pair to consider. Then we'll go down to, as I said, the 3-minute chart, and obviously you're moving faster and faster. And what the 3-minute chart is actually going to pick up all the oscillations that you are seeing on the 12-minute chart. The 1 hour is going to be smoother. So I actually use the 3-minute chart in conjunction with Renko when I'm in my MT5 account, and I'm just taking trades on these faster time frames. The 1 hour gives me a sense, tells me exactly where I am in the trading day. So am I coming up to a point of a crossover, which is very, very important? What has the sentiment been up to that point? We can see here the euro had been selling off, but as Europe came in and then London came in, there was some strong euro buying. How I then pick up that euro buying and in which pair I pick it up, this is where the matrix comes in, and the matrix you would have on the time frame of the chart, the time frame that you are looking to take the trade. Now, at the moment, obviously, there is very heavy selling of the euro, as we can see here. The gold line has turned over. There's actually a cross on the against the British pound on the 1 hour chart, and lo and behold, if we look at the matrix of the 12-minute chart, in fact the euro pound, that has been the, if you like, the heaviest selling of the euro has been against the pound. You could argue that there's a lot of pound buying because of the Brexit news. So the 1 hour chart tells me where I am in the forex day, in the different time zones. What's gone before, and these key points, these crossover points, when you are likely to get a change of sentiment. We saw it here at the beginning of the London and Europe session. We saw it here at the beginning of the US session. And I said this morning, this is buying, hasn't reached an overextended. Let's wait and see what the US happens. And what happened in the US? Well, the euro duly sold off. So that gives me my overall picture for the individual currencies. Then I go down to the actual time frames that I use, and I've got the 12-minute, and I said I have the 3-minute chart, and here I've actually got the 12-minute chart of, well, I'm looking at the euro. Now the euro is very oversold, as you see here on the 3-minute. Is it going to reverse up? Is it actually going to come to a point where, if I'm on the faster time frames and I'm using a Renko, for example, which is a non-time based chart, but I'm only looking for a few points here, a few pips. Is this reversal that is is going to be set up? Is there going to be enough in it, in the reversal, for me to take a trade counter to what I'm seeing on the hour and what I'm also still seeing on the 12-minute, because it's still falling on the 12-minute and the pound is still rising on the 12-minute. On the matrix, it is still very much down here. But you have to also go to the charts themselves. So I don't know if I've got a euro pound here. Let's have a quick look, see how that actually plays out on the euro pound. Have I got euro pound? Yep, I've got euro pound here. There we are. Let me just take that down there. And in fact, here we are. Right, what have we got here? I've actually got the 30-minute. Let's move that up to the hour. Right, in fact, the hour. This was the move higher that we saw this morning from the London Open. 1, 2, 3, 4, 5, 6, 7. There we are. It was actually a move away from the volume point of control, and this is the reaction that we've suddenly seen the last 2 hours. Huge volatility, bang, bang. And is there a possibility of a reversal in there? Well, it's the action is on a volatility candle, and when you get volatility, as we can see here, price action reverts inside the spread of that candle. It then can carry on through once it's broken the low of the candle, which it duly did here. This is the hour. This is what I'm seeing on the hourly CSI. This is, I've actually got the 6-minute chart here. Let's move. Let's keep the 6-minute, but let's move to the 12-minute. There we are. Let's have a look for a second. And here we had again move higher, then we had this sudden use, bang, volatility, bang, another volatility, a little bit of congestion, and then further down. We haven't had another volatility candle trigger so far. The volume point of control, again, huge. You can see prior to that, generally moving, drifting sideways with a bullish, with a bullish bias, if you like, which is exactly what we saw on the CSI. In fact, as I'm speaking, the volatility candle has triggered in. It's because the price action is outside the average true range. Okay, let's see if we're going to see the 3-minute chart. What have we got here? Again, the move has actually been precipitated away from the volume point of control, and it's been given impetus by the Brexit news, this likelihood that maybe there is going to be some sort of agreement. A ton of volume coming in there, volume there. The trend monitor moves into bright red. It doesn't look as though it is going to, what we're seeing on the 3-minute CSI, is there a likelihood for a little reversal? Then we go on to the Renko. Here we have the Renko here. This is the dramatic move. This is solidly red, trend dots all the way down. We had a little pullback there, but the trend dots stayed red. The trend monitor is red. This is the blue from this morning. The change in sentiment coming into the US session and then kicking off with the Brexit news. And what the Renko does, it helps to keep you in. So really, with the Renko, the time charts, and the CSI, that is really how you put it all together. And I go right back to what I said before, understanding the state of the chart, the condition, the C state of the chart when you come to your computer. Is it, if you'd come at this point here, and this was just moving in congestion with a bias to the upside, but look at the spread of the spread of the candles. They're narrow. There's kind of volume going in, but it's kind of drifting higher. As I said earlier, very difficult to take trades in this kind of market condition. The volume point of control was just underneath. Then we had the trigger for the move lower, and in fact, volatility. We've obviously had some buying under here. Now, if I were on the second, trading seconds, 10 second, 30-second charts, and there are traders who trade those charts, then maybe that would have given me a little opportunity. But and we're talking almost algos here. Is that enough to push that higher? We don't know. What is the Renko saying? Well, the Renko is saying it's still red. The trend dot is still at the top of the Renko brick, which tells us there is still downwards pressure to this price action. Where is this price action going? That's the next key question. Well, it's 0.8907. There's a support line there. So if it's going to move any lower, that is the most likely first staging point where it is going to stop. As mentioned earlier, I haven't got the camera up, which is an indicator that we've developed to give us, if you like, a hierarchy of the levels that we see on our charts, where we can actually trade them. We know where the price is going to, where it's likely to reverse or not. But we'll save that for another session. Is that all right? Anything else you'd like to say to that, David?
Yeah, no, just,
yeah, sure. I'll turn myself off, and then we'll go and have a cup of tea.
We're going to have a cup of tea, but before we do, just to highlight where we came in, which is really about politics. And the reason the pound has shot up is purely because there is the possibility of a deal, a faint possibility of a deal. So, you know, the pound has shot up. And that's what we're dealing with all the time. It gives opportunities for trading. All I would say is that if you're trading that particular move, be aware that over the last 2.5, 3 years, all these moves have come and gone, and we refer to them as souffles, because generally speaking, what happens is they rise and then fall just as quickly as the news becomes reality, and in fact, you know, this isn't going to happen, and so it collapses again, so on and so forth. That's what we're dealing with. Just running around. I won't go switch back over here, but you know, just to infill the bits and pieces. The yen is still has paused a little bit. It's still looking fairly bearish, so that's pretty positive for indices. The dollar is falling quite nicely now. The pound is rising quite strongly, and the euro is selling off quite sharply. So that's the reason you've got a nice move on euro pound, because on the indices on 5 minute you've got strong selling of euro and strong buying of pound, which is the perfect combination you want to see. And you could also look at the dollar in that context. Instead of pound dollar, cable would be rising strongly because dollar's selling off and pound is buying strongly. So there we go. I'm going to pass back to Anna. That's it. We're done. We're off for a cup of tea. I think we've answered all the questions. Hope we have. I hope you've enjoyed it. You can drop us a line if you have any questions. Anna@annacooling.com. Myself, David @quantumtrading.com. If you're interested in the indicators, or you have them, or you have questions on the indicators, then the guys at helpdesk@quantumtrading.com will be more than happy to assist with any questions you have there. So we will see you again next week for the London Forex session at 7:30. So enjoy the rest of the trading session, the rest of the week. Have a great weekend, and we will see you back here next week. Thanks for coming along. We do appreciate you taking the time to come along, and your questions as well. So I hope you've enjoyed it and hope you found it useful. And bye from both of us for now.